go, here we go, here we go, here we go. It is Markets in the Morning. Let's go. Hey, what's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Welcome to Markets in the Morning. Today is the highly anticipated September 17th, 2025. This is Markets in the Morning, where we take a look at the price action of the cryptocurrency market, including the Bitcoin price chart, along with the altcoin market, as you get ready for the stock market to open up in about 30 minutes from right now. Take a peek over there at any type of crypto news and financial news, and of course, precious metals like gold and silver. But on everybody's radar today, of course, it is September 17th. It's the highly anticipated Fed day on the Fed rate cut, and the market is just sitting here waiting to see what's going to happen as we go through this. As you know, we haven't had any cuts here in 2025, and the Fed has been very wishy-washy on any type of messaging. And what's going to happen here, right? So where do we sit? Of course, we've got the cryptocurrency market, or the altcoin market, sitting right at the all-time high, the biggest resistance, the biggest historical resistance of this chart in literally all of history as we go into this thing. So big moment ahead. Either way, we'll try to keep it as light, tight, and bright as we possibly can. But I got my volume fixed. That intro was a little light. Let's turn it up. Happy Wednesday.
It is Wednesday, my dude. It is Wednesday.
Alrighty, welcome everybody. Thank you so much for tuning in. Looks like we're probably going to have a decent showing here today. We had quite a few in the waiting room before we got kicked off. Chief Tame Blackbeard, thank you so much. So generous, had gifted 100 memberships prior to the stream starting, and so did Edward Lang, gifted 100 as well. And that's not cheap, guys. Man, thank you so much for your support. Like, it's crazy. You guys do that every week, and I'm so grateful. Thank you. And anybody who got their name flipped to green, you got hooked up. So guys, thank you very much for doing that. And you do that every week, and I'm so grateful for it. All right, here we go. So, you know, it's all been leading up to today, right? And I'm totally not like narrative driven kind of guy for the most part, right? But, you know, these last couple of weeks, it has felt that me making too many videos, saying too many things, and trying to over talk myself felt like it was just doing a disservice to me and to everybody, and just kind of like waiting for a particular moment to arrive, because we know that we're at two particular points. We're at really one particular point with two different charts here in the market, and it's really just an overall condition of the market on whether small caps and mid caps are capable of escaping from this market right now. And we have obviously the exact same thing happening over here in the altcoin market as well. And the stress, the anticipation, the wondering, the not knowing. Like, I don't know what's going to happen today. Like, I've spent a lot of time thinking about this. What's the probabilities? What are the things that are going to happen? I've been running it through ChatGPT. I'm like, ChatGPT, you know, here's the situation. Here's where we're at. Here's where the Russell is. Here's where the altcoin market is. Here's where everything is. The Brett situation. Here's everything. What do you think the chances are that the Fed's going to give us some type of catalyst to be able to push it out or to reject? And it says there's about a 50 to 60% chance that we get what we need to be able to do that. Well, 50 to 60% chance, that's about a coin flip, and that is pretty much indecisive. And of course, that's how I feel as well on how this thing is going to end up going today. But it's just such a confluence milestone, obviously, for us to be back at these highs for the altcoin market, back at the highs for the Russell 2000, and today we're going to get the rate cut. So, you know, the things that We could talk about it. Like it's priced in that we're going to get the rate cut. We'll talk about that, right? So you got the 2-month yield down to 3.99%. You got the 3-month yield down to 3.89%. The market is pricing in a 0.25% rate cut today, right? And this has been stuck in here since December of last year, right? So this has just been completely stuck, and we finally eventually have broken down in here, and we have the CME futures also pricing in the same thing. But the thing we've, of course, looked for, while the CME futures has, guessed this type of stuff, but by the time we got to the meeting, these odds had shifted drastically by the time we got to the meeting. Obviously, here we were getting to the meeting. We still have the odds sitting right here, but we're also getting the validation as well from the yields, right? So the 2-month yield has dropped 0.25%, insinuating that we're probably going to end up seeing a 0.25% or 25 basis point rate cut come here later today. The big thing, right? Just based on all my research, based on everything we're doing, looking at this, people always want to say, the money printer is turning on, the rates are cutting and everything like that. Well, why are they going to cut rates, right? You kind of listen to the messaging of what they've said. They've said, the labor market is starting to soften. I'd have to pull it back up. I should have done that before the live stream, but I do believe that the housing, was said in the last one, the housing market is slowing down, right? It's kind of coming to a stall. So that's anticipated to probably be mentioned today. And it's not, so I would expect them to say that today. And it's not going to be that, them saying that, labor conditionings are tightening, or the housing market is coming to a slowdown, or that this 0.25% basis point or 0.25% rate cut is going to end up changing the world. But it's what do they say after that? It's always the things that markets are always looking for. And it's going to be, what is the forward guidance, right? Like they could sit there and say, it looks like there's some uncertainty ahead. There's some concern ahead. Labor conditions are concern ahead, housing market concern ahead. But then them stating, but we'll be here to help, right? We're the Fed and we're here to help, right? Them kind of changing that tone, changing that dovish tone, that this is not a one-off mid-cycle policy shift, right? And that's what we've heard before. This is a mid-cycle policy shift, but this is more of a starting of moving towards an accommodative interest rate rather than restrictive interest rate, right? So I think everybody's looking for not just language of here's 0.25% that's been cut, but this is the trajectory that we're now heading in. And here's what all of us at the Fed see, how we're planning on doing it, and where we're going to. Another thing is, well, of course, we've been doing quantitative tightening. Do they mention that they're going to slow down that tightening, the balance sheet runoff? They're going to kind of slow down with that. So there's going to be quite a few things that market's really actually going to be looking for beyond just the 0.25%. The 0.25% is priced into the market. That's not going to be any type of surprise to the market whatsoever. The big thing is going to be, what does the Fed look like moving forward? Do they frame this as just being a mid-cycle policy adjustment, or do they frame this as we are now going to start working towards an accommodative policy, right? And that's what we're all waiting on. And that's the thing that would probably give this enough juice to be able to bust out of here, and give this enough juice to bust out of here. And, to get back to these levels and be at these particular places when we enter this major milestone moment, it's major confluence, right? Super mega resistance. And will it have the juice? Will they deliver the goods that it turns the risk on? Right? They're just to completely bust it out. And that's what we're all going to see today. And there hasn't been much to say beyond that over the last couple of weeks as we approach this. Waiting to see how the markets are going to respond to this moment in particular. And I don't know if today is going to matter so much. If there's going to be a sell-off today, but it's just a quick bounce off of a support, right? And then boom, ricochets its way back up, or if it's going to break out today or whatnot. Is there going to be something majestic that happens today? I don't really know. I'll have to just kind of watch, wait, see how the charts react to it. Of course, when we're in the thick of these moments, there tends to be a tremendous amount of volatility, and it's very difficult to interpret any of it today, right? We could get the release of the FOMC notes, right? And it could say something, and we could see the market sell off by hundreds of points, right? And then Jerome Powell can come up and talk, and he can say this is the beginning of our move towards a more accommodative policy, and then the market reverses and shoots back to the upside. Or, there could be a surprise and they cut by 50 basis points and the market fires to the upside, but then Jerome Powell comes out and says, however, this is just a mid-cycle policy adjustment and we don't intend to do any more beyond this. And then the market would sell off afterwards, right? So it's going to be hard to know what the market is doing in the thick of the moment until we actually get through it and see how the market reacts over the next couple of days. And, we're at a place where something could happen. We have the confluence of that with multiple markets, that we're at a place where something like that could happen. And, fingers crossed, that's what ends up coming as we get through today. So I don't know if there's really too much more I want to interpret about the charts when it comes to today's particular price action until we get through this moment, because it's just pretty damn almost slipped up there. Pretty darn clear where we are, right? We're right back at the highs and the market's looking for some type of catalyst juice to be able to bust it out, right? And so today, is that going to be the catalyst that we end up getting? And we're going to find out here in a few hours, right? We're going to find out in about 4.5, 5 hours. So we will live stream this. So for those in the United States, I can at least tell you that's going to end up being what? I think we go live at 1:55 p.m. Eastern, 12:55 p.m. Central, and 10:55 a.m. Pacific time. So yeah, you'll have to figure that out for UTC time or any of that kind of stuff. But anyway, if you're watching this live, you get an idea of when that's going to be. Of course, you can go to the CME group and look at their interest rates, CME FedWatch tool to get your countdown ticker. But we'll do that live today. This will be the last one that we do, at least in its current format right now. Going through this for the last couple of years, I don't know how many of these we've done. I should probably count. But I'm pretty sure we've been doing this for almost 2 years now. We've been watching the Federal Reserve streams live. But of course, that's just been waiting for them to actually transition and for there to be the Fed put. And so if we end up getting the Fed put today, it would just kind of be majestic in it and say, there you go, that's it. We can watch the Fed talk all they want beyond that, but we got our Fed put. But that's what we're obviously hoping to get today is the headlines all read the Fed put has happened and that they have capitulated and it's over. We are now going to enter into a cutting cycle. So that's what we're waiting on today. Keep your eyes on the yields. So we'll see if these just kind of stay here and hover here at 4% as we get closer and closer to the meeting today. If they suddenly drop to 3.75% or something like that, we could maybe see a surprise of the 50 basis points. But as of right now, the yields all price it in at 25 points, right? So anybody guessing beyond 25 points, it's just none of the data really suggests that right now. It would totally be a surprise to the market. You'd probably be if we did get 50, I think it would probably have to be that just not scaring people, right? Not scaring people. Just being like, look, we're behind. We're going to catch back up. All is well. We're here to protect everything, and we want to see the economy crush it. Not, oh, there's panic. 50 basis points, panic, right? That's not what we want. So we'll wait and see how this goes. But as of right now, 25 basis points is the base case. That's what CME futures predicts. That's what the 2-month and 3-month yields also indicate. And that's what everywhere out in the professional world are predicting as well. I'm not going to go against consensus and pick something different. This just seems to be the most probable at this point. Expect 25, and we'll see what Jerome Powell says. It seems like what he says is going to be way more important than what the press release actually is. And are we shifting to an accommodative stance? Or is this just the beginning? This is not being a mid-cycle policy adjustment, but being an actual transition and shift towards a more accommodative stance. That's what we're looking for. That's what could potentially give this the catalyst juice to bust its way out of here for Total 2 and for the Russell 2000. And that's what we're waiting on, guys. Okay. All right. Bitcoin, 116,151. Looked all at this stuff. We've looked at yields, Russell. Obviously, we've talked all about these things too. Of course, we have the structural setups that look favorable in the crypto market, right? Like the overall transitions and the overall grinds up that we've been seeing in the market have been favorable. We've seen that on Ethereum. We've seen that on Solana. We've seen it on the total altcoin market cap. Obviously, right? Like it's all favorable, but you kind of get the drift of where we're at, right? Like there needs to be the bust out, and does this end up becoming our catalyst to end up doing it? That's what we're kind of waiting on, right? Same goes for ETH and the rest of the markets. We won't dive into that. XRP, of course, it's the big mystery, and the same exact thing. Like, you have two completely different scenarios, right? You got the altcoin market sitting right here at the highs, right? Obviously, what do you want? You want to see it bust out of the most intense resistance that it's had in history, and you don't want to see it reject from the most intense level in history, right? Either one of these are plausible, right? And then you look over there at XRP and you say, all right, well, if we're going to do the bust out maneuver, then this is just a pit stop. This is your ABC correction happening in here, as we've seen for gold. And then you just go rallying off into the stratosphere, and all is well in the universe. Polar opposite, what happens if the market rejects from the all-time high up in here? Well, rather than that, what do you have? Well, here's another, the one that we've brought up here in Markets in the Morning several times, of what Cardano did back in 2021, right? So we are at a crossroads today, and we'll find out as we get there. But of course, we've had the stock market, the major indexes all in these all-time highs. We're just wanting to see breadth open. And when it comes to breadth, one of those things we've talked about has been safety trade dominance historically, right? We could be on the cusp. I wrote about this in the newsletter, right? That we're right. We've seen a little bit of a breakdown start to emerge here on the safety trade dominance in regards to the last couple of days. And we've been holding this since July. So July, August, September, just about 2 months holding in these levels right in here. There was a little bit of a shift happening in the safety trade dominance. That was very similar to what we did back here. And we've looked at this through this lens multiple times as well. And I say, all right, well, what would you need for that to happen, right? What would you need for that to literally be that moment and that to happen? Well, you'd probably have to be busting out of the all-time high. Well, where's the market set up at? It's right back at the all-time high. So there's a lot of things that are set up that are like screaming, this could be the moment. But boy, it feels like walking on eggshells to even say that, because we all know what can happen at these major resistance levels. So like everybody, I'm kind of sitting there waiting to see how the market's going to react today. I see favorable things. We've looked, of course, at bigger time frames of the Bitcoin dominance and all that good stuff. And it looks like it's time, but we all know there's one last hurdle that has to be overcome here. And we're going to approach this moment in time, not just for the altcoin market and for the Russell, right as we're doing this Fed meeting, right as we're going to enter into a rate cut. And the thing is whether they state this is the start of accommodative policy shifting, right? And if they are, then who benefits, right? The companies that carry a lot of debt, it's going to be your low cap and your mid caps. So big day. Gold, right? Are we already done? We can already see the bearish divergence showing up in here. We talked about this being the short squeeze, the final little push. You got a bearish divergence emerging in here. So we'll see how the day ends up going. I just realized I don't have the news up. You can tell I don't ever read the news before we come on Markets in the Morning. There's channels that make their entire YouTube shows about the news, and you can tell how much I care about it. I don't even have any idea what's going on in the news. I'm just looking at it off screen. Speaker Johnson says China is straining U.S. relations with NVIDIA chip ban. Who cares? Mortgage refinance demand slips nearly 60% as interest rates drop sharply. So refinance demand is dropping. There's nothing going on in macro markets. Everybody's waiting on the Fed. I mean, right? We all know it. I'm looking at everything. It's all just Fed. It's Fed and nonsense, right? There's nothing to talk about when it comes to news. So, deep breaths. Big day. All right, so we'll go ahead and run through. We'll hang out in the chat. We'll kind of make today a little quicker, which is what I say every single week, and then I run way overtime, but hopefully not today. September's been an interesting month for me in regards to like a fitness journey I've been on, and I'll share that with y'all another time. I'm trying to hit a particular goal. And it's been like a thing in my life. I've been doing essentially doubles every day. Yeah, so not every day, but today is the 17th. And by the time the day is over, it'll be my 24th hit workout of September. So it's been this. September has been nothing but a journey of insanity, of feeling dead. All right, there we go. Let's go ahead and hop into the chat. Again, guys, Edward Lang and Chief Tame Blackbeard, I'm incredibly grateful for you guys. The chat is incredibly grateful for you guys for all the memberships. Thank you, thank you, thank you, thank you, thank you. Happiest little place in the galaxy, member for 23 months, says, enjoying BCB's free content? Question mark. It's time to support the awesome channel by tapping the join button and be a $5 a month paid member. Say thank you, BCB. That's very kind of you. But as you guys probably know, first of all, that's very nice of you. This is your 23rd month. You're only 1 month away from 2 years. Thank you. I don't ever actually pitch the memberships. That's up to you guys. I'm grateful for it that you guys gift it and that you guys join and everything like that. That's just kind of an extra perk. I don't go live in an attempt to like gain memberships. It's not like my main thing. This is just a weekly. We used to do markets in the morning every single day, and I think we've been doing markets in the morning for 2.5 years now. But then starting last summer, it shifted into just doing it every Wednesday, and we just kind of maintained that ever since. It's been much more manageable for me to be able to get YouTube videos out because I was only getting out like 3 YouTube videos a month when we were doing markets in the morning every single day. It was a workload that I just couldn't handle. But memberships, yeah, that's up to you guys. I don't ever pitch it, but you guys are incredibly gracious about them. Financially, the number one way to support the channel is to subscribe to my newsletter because that's where I put in the most effort when it comes to any, like, memberships are great, but you're just kind of, donating at that point. I actually put a lot of effort into my newsletters. So, they take days. Janice, member for 16 months, and I feel terrible because I think one time you corrected the pronunciation, and that was probably a year ago, and I still don't feel like I'm nailing it. But thank you very much. ZW, tell me something positive about Matic, aka Pull. Polymarket. I haven't checked in a little while, but the last few times we've checked over the last year, I haven't checked in a couple months ago. It was still ranked number 3 or number 4 for NFT volumes. Beyond that, I don't know. What do you want to hear? Which, of course, is way above everything else, right? You got Bitcoin, Ethereum, Solana, and then Matic or Polygon. Of course, you have Polymarket too, right? Gator gifted 5 memberships. Brother, thank you, Gator. 702 crew, my dude. Arm Day. BCB, when would you personally start hedging silver and gold off the table? And with gold at these highs, are you hedging now or still letting it run? I'm still letting it run, but everybody's got their own time frames, right? Like, if you are overexposed, so I feel relatively decent on how I'm balanced. I wish my cash position was a little bit higher in the markets, but I've got a lot of exposure to crypto. I've got a lot of exposure to gold, and I've got exposure to cash, right? And I think I mentioned it last live stream. It's like 25% cash, 25% gold and silver, and 50% crypto. And that feels a little overweighted crypto. I know it feels overweighted. It feels ridiculous. It feels insane. But I'm also not in a position where I need the cash, right? So if I sold the gold and I sold the silver, do I need the cash today? No, right? So it's going to be kind of personal in what your time frames are looking at. And another thing is depending on whether or not you're doing, just contract trades, ETF trades, or if you're trading in the physical metals market. Because right now I don't want to say it's a bad time to sell, but you're not going to spot price it. You're getting back of spot on everything that you're selling. Go back and reflect back on Wall Street Bets, the silver squeeze, and all that type of stuff. People were paying over $20 over spot for silver eagles. Go back like a year and a half ago, people were paying $10 an ounce per spot over spot for eagles, right? You go back and you try to sell those right now, right? They're going to give you like $1 back a spot on eagles, which is like $1 below spot. So if spot's at 41, they're going to give you 40 for them. If you sell like a Canadian maple leaf, they're going to give you like $2 below spot. And if you just sell like a silver bar, they're going to give you like $3 below spot. So you're only going to get like $38, right? But then if you go try to buy it, they're going to charge you like $1 or $2 over spot. So the spread between the buy and the sell is like over 10% right now. It's like around 10%. So you're really needing a major fall to happen to offset that much. And then if a major fall happens, our premium is going to shoot up again and make it not worth it, right? So trading metals, very difficult. I don't think it's I don't ever give financial advice, right? I can tell you it's a very alluring place to be selling. If you're like, I'm done, right? I'm out. I just don't care. If it runs higher, it doesn't matter. If it falls back, I'm not even like thinking about buying it anytime soon. If I'm just wanting a place out, it seems like an alluring place to do it at. But just due to my portfolio weighting and how I am, everything's trying to keep everything as balanced and hedged as possible to not get annihilated. It's hard for me to do it, but I don't think it's a wrong place to do it. Because like for me, it's not. Like I've said, I'm not planning on like selling gold and walking away from 10 years. Like if I sold it, I would be trying to buy it back. Like I already know it. And I'd probably start buying down in here. Right. So I look at it as like, all right, I probably would want to start buying right here. It says negative 24%. Well, I already know if I go to try to sell it, they're going to give me 5% back a spot right now. 5% back a spot. And then when I go try to buy it, they're going to charge me like 5% above spot, maybe only 3%, right? Depending on what I buy. So essentially I'm trying to make 17%, but I would need it to fall 24%. And so that's a problem. If you're just doing contracts and you're just doing it in a brokerage account, that's a totally different story. But I don't want to spend too much time on gold. So because of my long-term view on gold, that I think it will continue rising long-term. And like when I buy metals and stuff like that, I do have like 10, 20, 30-year horizon on them. It's not short-term. That I'm just not trading, but I do think it's going to fall. I do think it's going to fall. Reflected Digital, let's go. Thanks, BCB, for all you do, man. Next month's US is my 5-year anniversary. This channel, the only one I listen to. God bless. You know what? Okay, it's riddled with typos, but I do know this. Like if you're using a phone and you're trying to super chat somebody, why does it mess up so bad? Why is it? Like, does that happen to anybody else when you're trying to super chat somebody and you're typing your message in? It just like is constantly like lagging and riddled with typos, and you have to like fix it. Yeah. Ron XRP win says all the time. Yeah. Dorian, yes. 20 win, yes. Gator, yes. Okay, so like Reflected Digital, I'll give you a free pass and all that. And I'm not sure exactly. Next month is my 5-year anniversary with this channel. Thank you. And Reflected Digital, I believe, is the one who took the picture of me and John Deaton at XRP Las Vegas. My brother. Thank you. Arm Day. Hola again, BCB. What's your outlook on AVAX this cycle? Are there price target areas you have eyes on? Retraces first, right? We have two separated kind of markets. You have the ones that are leading the pack and the ones that are at their all-time highs, like Ethereum, Tron, Binance Coin, XRP, Bitcoin. Then you have kind of your mid packs, and then you have your really big laggards. And it's been a little. I appreciate the super chats, guys, but I can't pull up all the different altcoins for the super chats, or else we'll be here all day. Because I know what that puts in motion. That it starts a series of $2 and $3 super chats wanting coverage of altcoins. But retracements, right? And so I teach you guys how to do that. Very simple to pull up a retracement tool right there. That's it. Hard to say it's going to be one of the ones that breaks out. I wrote about, so like in the most recent newsletter, I wrote about, we revisited developer activity, we revisited user activity levels and looked at those things, right? AVAX, Avalanche, does land there in developer activity, 30-day developer activity, lands in the top 20. It does land in the top 20 for total developers, along with having developer growth over the last year. And as for total value locked, TVL, DeFi, sitting at about 2 billion, right? So you go, and 2 billion is huge, right? So you look at like XRP, it's at like 100 million. You look at Cardano, it's at like 500 million. And a year ago, it was 1 billion for AVAX. Right now, it's 2 billion. That number is huge. It's nothing compared to what it was in the chaos and craziness of 2021, where it was at like 12 billion, right? So was that just a crazy AVAX insanity thing back then? Maybe. But, you know, it's got the fundamentals to go along with it. Ryan Rendon, member for 61 months. Oh my gosh. Dude. Ryan, 61. I didn't even know we've been doing this long. That's 5 years and 1 month. Ryan, thank you, dude. That's crazy, man. Of course, I've met Ryan in person multiple times. I've even played disc golf with Ryan. Thank you, dude. New Wave Consulting. I'm not Oscar Hernandez, but I'll see him on the moon. I know that you're not Oscar Hernandez because I've met not Oscar Hernandez. I have met the Oscar Hernandez. I have had dinner with Oscar Hernandez, and I have had dinner with not Oscar Hernandez. So you are correct. You are not Oscar Hernandez. But I'll see him on the moon. Thank you, brother. Basim El Kadri. Hey, what criteria for altcoins do you believe will hit 4.236? Can you give a couple of examples? The ones that have the highest probabilities are the ones that are already at the all-time highs if we're able to get an expansion. Right? Like back in 2021, things that weren't already kind of knocking on these doors had much, like we didn't, like first of all, in 2021, only 20% of altcoins were either able to touch their all-time high or go into an all-time high. Only 20% from the top 100. So 80% retraces, various different levels of retraces, right? No uniform 702, 618, 0.5, nothing uniform, right? Some hit, some literally topped here, all along the way, right? But only 20% were able to escape into new all-time highs. So we went through a lot of the data to say what increases the statistical probability of being able to get out. And I've written lots of newsletters on this, a whole series of it. Gosh, was it late 2023 that I did that? A whole series on it. Of course, we've touched on those topics again, but the things that increase the probabilities of them being able to do it were 1% drawdowns. The assets that had the shallowest percentage drawdowns had the highest probability of being able to do something like that in 2021. I believe 65% of the top 20 or whatever from percentage drawdowns were able to break into new all-time highs versus only 20% of the market, right? So that was like a sector that crushed it. We see that now too, because we know that Binance Coin, Tron, XRP, and Ethereum, and Bitcoin were all in that top 10 shallowest drawdown group. And all of them have touched new all-time highs. All of them. So those five still have your highest chances of being able to do it in the event of the market being able to escape. Looks like we got the stock market open. You got the Russell up, hold up. There you go. No big changes in crypto. Everything's waiting until the meeting. But you know, you do get your rando one that does it, right? That catches, like the most famous one that did it last cycle was Ethereum Classic, right? And that, when it came to me looking at trying to like guess things, like we have to remember the environment we were in 2021. We're in very like sketchy environment of the SEC. It was really unknown with the SEC and how they'd come after the altcoins. Because XRP had already gotten hit there in December, right? And so it was like, who's going to be okay? Who's going to be safe? And, things I had looked at, of course, were like EOS. They had just gone through their whole thing with the SEC, and they had already, what's the term? Made a deal. Whatever. I don't know. Made a deal. It got dropped. Whatever. You look at Bitcoin Cash, right? Just a fork of Bitcoin, right? These things are available over there. Or Bitcoin Cash available over there on Robinhood, available over there on PayPal, every single, Binance, everything like that. And then another one, Ethereum Classic. It's right. Well, Ethereum Classic is just the original Bitcoin, or the original Bitcoin Cash used to say it's the real Bitcoin, but Ethereum Classic was the original Ethereum, right? Then they had all their drama and forked it, and now you have your current Ethereum, but Ethereum Classic was the real Ethereum, and so there was no like problems there, right? And the theory on that one would be, what we've seen before is retail is so stupid that when they pour into the market, they don't know which one to buy, and they'll buy Ethereum Classic, and sure enough, it did. That was the dumbest theory possible. And they did. And they shot it all the way to exactly a 4.236 extension for the market cap. So sometimes there's just stupid stuff that happens with some of it. But if you're looking at fundamentals and things that impacted it, it's developer activity, user activity levels, and percentage drawdowns. And you're probably looking for things that are already showing signs of being stronger than the market, like Binance Coin or, XRP and Ethereum and things like that are already pressing and showing signs of strength. And then there'll be the random outlier that will probably fire crazy, right? But it's very hard to predict what that will be and the reason and justification for it, like your Dogecoin of 2021, right? All right, so I'm going to try to move a little bit faster so that way I don't catch myself at the very end. Bencuz, for the first time in a while, I'm on edge. Weird. Yeah, and I wrote about this too. Like, everybody is on edge. Gosh, I read this and then I just start chatting because I think it's important. It's very fascinating to be back at the highs and the crowd sentiment not be there, right? We can reflect back on really all the times where we hit the peaks, we hit the tops, and it's always met with crowd euphoria. It's just always met with it. And to get here and for the crowd to not be here, and for everybody to be on edge, and for everybody to be worrying, it's like, hey, everybody, we're all scared and worried. We all get a free pass to sell the top. It's interesting, right? Like, it's the missing element. It's the one, like, and I wrote about that too. Like, we go through all these different things in the newsletter. I'm like, but then it all comes back to, with hindsight, right? When we all have the ability to use hindsight analysis and say, how did you not know that was going to happen, bruh? Dumb Mario. We look back on it and we say that one element that wasn't there, that was just like, duh, that's why it was so obvious. There was no crowd. There was no euphoria. And like, I can tell you from just data I have of my own stuff, because I've been doing this so long. I mean, we just had Ryan Rendon come in here and do 61 months as a member. I have so much data of my channel that all the things that I do, that I can line it up against the crypto market. And I know when we're in euphoria based on my own data of my YouTube channel and everything that goes with my channel and my engagements and everything. I know when we're in it. We're not, dude, at all. Not in the least bit. The crowd is not here. And where does the crowd pour in? They always pour in at the high. But to see it be like a bear market here, it's not usual. It's not what you usually get. You don't usually top with the crowd acting like a bear market. But everybody's on edge. It's a psychological thing, right? We refer to it in the past, like the all-time high jitters, right? The worry, the concern, the everything. You know you're at the high. You know things can go turn south at the high. And we know we have a narrative here, right? So, like the most bullish thing to hold on to in a world of unknown is the crowd. It's not here at all. And I promise you, if it turns up and I start seeing all those things happening on my channel and my engagements and all my things that are like, okay, guys, I'm just letting you know the crowd is here. Letting you know. I will let you know. I promise. It's the crowd is like a bear market here. It's crazy. Crazy. The depths of a bear market is what the crowd is like right here. So we'll see. Texas Takeover, Wen Moon, my brother, 29 months. We're almost at 2.5 years, dude. Thank you. And of course, Texas Takeover has been here much longer than that. He was a person who always wrote in the comments every single day. Since way before then. Justin King, the Fed has cut rates with equity markets within 1% of all-time highs 16 times in history. The S&P 500 was higher a year later every single time and an average return nearly 15% per JP Morgan. Yeah, well, frankly, we don't care about the S&P 500. We don't care. What we care about is this breadth dynamic shifting. That we've been stuck in this type of dynamic. There hasn't been an expansion in the stock market, right? You have the major indexes propped up by a handful of large cap equities, but you have not had participation of the broader market. It has been just mega caps holding everything up and the small and the mids being completely left behind. And so frankly, we just don't care about the S&P climbing up. We care about the breadth being able to open wide up. And that's what we're all really looking for right now. James Eads says, hey, BSB, thank you for all you do. Quick question. Do you still have a strong conviction for XRP to hit 4.236, given that the rest of the market goes to new all-time highs and XRP follows? Yes. If the market breaks out from here, if the market goes and the whole market goes, yeah. But where's my stuff? I guess it's here. Right? But we have to see the whole market do it. Don't want to see the whole market falter. If the whole market falters, this opens up this can of worms, right? But your question is specifically, barring that the market breaks out, do I think XRP is going, and do I still think 4.236 extension, which you didn't clarify market cap, because my conviction is market cap, not price chart, which is like over $8. Yes, definitely. That's my conviction. That's still my trade. That's the way I'm going to stick on it, unless something shows up. But no doubt that's still the base case in the event that we get the breakout from here, right? But we've got to get through this event right now and ensure that we are working on the continued grind to happen in here and not rejecting from the highs, right? Rejecting from the highs opens a pretty nasty door. Breaking out from the highs opens the path to glory, and still that target remains exactly the same, 4.236 extension. Not only this range in here, right? So that says 9. I'm going to stick closer to in the 8s, but the market cap as well on the major time frame from 2018 through 2025, definitely. I skipped people. Thank you, James. And thank you, Justin. But I just wanted to clarify that when it came to S&P, it really don't care about the S&P. We've been stuck in a really crummy dynamic here where the market still has not had the confidence to broaden out, right? So it's less about just the cut. It's more about them implying that the cuts are coming for good. JMO, watch you since I was 19 years old, and I'm now 25. Gosh, you changed my life navigating XRP. More than doubled to tripled my bag's value, paid all my debt off, and bought my dream PC because of you. Shout out my friend Remy, please. He watches too. What's up, Remy? And Jamo. Jamo. Thank you. Only at 25. There's plenty of debt to come, my friend. Good for you, buddy. JP Slabs, good morning, BCB. With how anticipated the red kit has been, do you think it's possible that it's already been priced in? Well, the 25 basis points has completely been priced in. It's no surprise to the market, 100%. What the market hasn't priced in is whether or not this is the beginning of the Fed softening its stance, or if this is just a short-term policy shift. And Jerome Powell does this exact same stuff where we know nothing about nothing. We make no commitments to anything. Who knows anything about anything? Or does he come out and say, we're here to support the economy in the event of employment drawdown, things like that, right? So I think it's going to be what's the Fed looking forward like? Are they going to make things easier for these small companies? And if they're going to make things easier for the small companies, well, then what happens? John Schugert, member for 22 months. Do you have a price range on silver price you're looking at if it ends up following gold's movement? I don't think silver is going to break out into a new all-time high on this push. I think it's going to stall out. Right. If, it could get as high as the all-time high, but I think it'll still stall out. But long term, right? And like I talked about earlier, 10, 20 years, right? I'm looking for like $200 on silver. But it's not something that I think is going to happen in a year or 2 years or 3 by any means, because it just doesn't go at that rate. How many years is it taking to get back to where it is, right? Its high was set 14 years ago. And here we are. We still haven't touched it 14 years later. Oh, man. Aman Singh says, do you still think gold top for now? I think it's working on it. I think this is a short squeeze. Shane XRP, new member. Welcome. Something tells me you've been a member before, though. David N., member for 27 months. If we reject hard today, do you think there's a chance the top is in? Not sure what the next narrative could be for another catalyst. A white swan, question mark? Yeah, we'll have to see it. It's such a difficult time because you're left at it's so difficult on how to handle it. Because you could just get hit with volatility, obviously, in either way. Anybody trading today, there's going to be traders who, there could be all different things. There could be traders who get absolutely crushed and annihilated today. And at the same time, traders who make buku amounts of bucks, bukus. And then at the same time, if we see what we see a lot of times where there's volatility both ways, everybody could get wrecked when it comes to like active day trading. But yeah, it's hard to anticipate how it'll look and what will happen. And I don't want to theorize too hard on it until something actually prints itself on the chart of, what I would anticipate next. So I need to see something get printed and then say, here's what I like about it, or here's what I don't like about it. Because right now, like here we are, we're in the moment, we're ahead of it, right? We're looking towards the future right now, right? If you got a big fat red candle like that right there, right? Like, oh, why didn't you do anything when you were there, right? Or you get a big fat green candle. Why didn't you do anything when you were there? Well, somebody's going to be wrong, right? And then the hard thing about today in particular, right? So here's the problem where the today in particular is, right? And so the way I think about it is like, okay, well, first of all, I don't do a lot of day trading, right? So like for tax reasons. I like to only pay 20% tax rather than 40% tax. But let's say you just go ahead and just sell it out right here and you say, okay, if it breaks up here, then I'll buy back in, right? Or if it falters down here, right, then whatever, I'm okay. But the opposite could stay true too. Like you stay long, and then if price falls, then you're like, okay, I'm done and whatever. But the problem is that doing that today, you could just get rattled. You could get annihilated on both ends of the trade. So I've spent a lot of time thinking about this, and how do I get myself prepared for this particular moment? And then you got somebody asking, you just get rid of your gold right now. Do you do this? Do you do that? Do you do that? And I think I'm just going to stay positioned the way I'm positioned, and wait for the market to settle itself out after this moment and then be able to make a decision. But I think it's just very difficult to do it right here. And I think anybody knowing with certainty will then broadcast it certainly that you have it, because I don't have it today going into this moment. I don't have that certainty. What I have is confluence markers to say, here's where we are. We're right at this critical juncture. And if things go right, the day could end. I don't want to say it will or won't, right? But like, if there's ever a chance on a day it could happen, today seems like a reasonable day where like we end the day and it's like, we're all like, holy crap, it's happening. Or we're like, oh crap, that looks terrible, right? Like, today could be a monumental day. Like, and you wait all until this moment, you wait until you get here, and very, very difficult here to make a decision and have stops, right? Because of how volatile it could be. But I think if there's a chance it could be today. But if it sells off really hard and really aggressive and there's something I just don't like about it, I'll start talking about it, right? And say, here's things I don't like, here's things I'm looking at, right? Or have we done what we were talking about in the last video, right? That's it, right? Well, shoots up 702, altcoin market's a little bit higher, boom, that's it, right? We'll talk about those things, but I just don't want to be that guy who's drawn up 1,000 scenarios today. And then what I do is I go back to my 48,000 scenarios I had and I say, told you. And I get it. Sometimes you don't have a choice. You have to kind of say, like, I don't really know. And that's kind of where we're at. Like, what I do know is there's a tremendous amount of confluence for something crazy to happen here. A tremendous amount for something absolutely nuts to happen right here. But let's get through the day and find out what happens. But yes, there would be a chance, David. Nil Shah, BCB, thank you, BCB, for everything that you've done till date for all. You are one huge reason why I hold only XRP so confidently till now. Thank you very much. Jerome Van de Ven, any thoughts on Representative Tim Moore, member of the House Financial Services Committee, shorting the RTY? What does he know that we don't know? I don't know. Don't know. Charles H. Good morning, brother. Have been following you since day one. Not going to ask for analysis on SWI. In the past, you said that we could use it as an indicator, perhaps even a leading indicator. You don't mention it anymore. It's just been stalled. I'll pull up SWI. Right. The bull thesis of SWI. Let's go to the... Yeah, we don't use that. All right. The bull thesis of SWI, of course. And that this is a contracting triangle of a crash, retrace, reaccumulation, right? Right, we've looked at 5-wave structures quite often from various years, right? But like a good example of one It was right here where it was very similar. Right. And then a wave 5 extension happening from here. And then that's the bust out. And then that's the go. It's not leading right now. Right. But it's not that it looks terrible. It just hasn't done anything to lead the way. And like, if I would say if there's any leaders in the market right now, there's only one, just one, and that's Binance Coin. It's the only one that still continues to shift to the upside and in all-time highs. Otherwise, everything is really stalled out right here, waiting for a decision on which way to go. But is there a technical setup there on SWE that could still lead to wave 5? Yeah. It's just we're waiting on the whole market, or is my thoughts. Thank you, Charles. Chosmos, hey, BCB, I've been thinking about trying to learn how to day trade full time because I love the charts and don't have a career. I'm unsure about if it's generally a scam, as everyone knows most lose money. So you have to be committed to it fully. And you essentially have to learn how to become emotionless, and you essentially have to pick setups that you like taking and that you have a track record that you've documented. What are the statistical odds that this pans out? Nothing is going to have a 100% track record on any type of trade. They're going to have plenty of them that are going to end up going one way. There's nothing with 100%. So it's just that if you take a trade, like if I say, I know that if I take this exact trade 100 times, that if I do this exact same repetitive thing over and over again, I'm going to be right 65% of the time. 35% of the time I'm going to be wrong, but 65% of the time I'm going to be right. And when I'm right, I get paid 2. And then when I'm wrong, I lose 1. Right? Even with 65%, it could still be the same. I make 2 65% of the time, and I lose 2 35% of the time. You still net win, right? You're not going to have 100%. But you have to be so automated. You have to be like a computer. You have to dedicate full time to it, and you have to have very specific setups that you're used to doing. It's a lot less sexy than the world makes it seem, right? With the gambler's mindset. Very boring for people who are actually very methodical at it and good at it, and want to spend their time doing that. I personally don't love doing that all the time. Unless like the market's like roaring, right? Like then it's a little bit more fun. But you know, it's not, you have to, first of all, make sure you are like dead inside. You don't get emotional very often. You're just totally dead inside. That helps a lot for day traders because they just don't care about anything. And if it doesn't impact you, taking a loss doesn't impact you, and you have a track record and you monitor it all and you understand you're just playing a numbers game. You're trying to flip a coin, and every time the coin lands on heads, you make $2, and every time it lands on tails, you lose $1. And you're knowing that you're going to get half of them wrong. But you know that you have risk to reward setups that are just going to make it to where you only lose 1. If you want to dedicate your time to that all the time, by all means, go for it. But to even make a living off of it, right? Most people think, oh, I want to make a living off it. I'm going to do it with $1,000. Well, you're already kind of in trouble because you're going to have to take risky bets. How are you going to live off? What are you trying to do? Well, I need to 30x my money in a month. Oh, well, that's not day trading. That's not day trading. That's the leveraged risky betting. And so but most do lose money because they're not following a strategic plan. Something very boring. It just needs to be very boring. It's definitely something you learn on the side, and you practice on the side until you get really good at it. And you practice it with really small amounts of money. And then you say, how did I do? And if you do really well, then there you go. James Eat, ABCB, thank you for everything. I think I got this one. Yeah, James, thank you. Okay, I got to go fast. I have 1 minute. John
Sugar member for 22 months. Do you have a price range on silver? I think I already got that one. Thank you, brother. Alex Smith, member for 9 months at BCB. While ago, I made a video about $25 XRP. I know you'll be selling way before that, but do you still see that as a possibility? Still, thanks. Yeah, I knew. It was like brought up. I want to be very clear. Very, very, very clear. Because that was brought up in a way that y'all have been told 1,000 times. I'll be selling most of my XRP before I even get to 10. Okay? Very clear. There would have to be some miracles for 25 to happen. Miracles. I find it very improbable. Not Oscar Hernandez. The man, the myth, the legend shows up and drops a big bomb. Dude, thank you, man. 200. I heard my name, so I had to jump in once again, express my gratitude to you and to this community. We've also worked out together. Oh, we have. And I can attest that BCB is a beast. All right, there we go, guys. He says, we have worked out together, and I can attest that he is a beast. That's right. I said we only had dinner together, which we've had dinner together twice. But yeah, I've worked out with him too. He said 2 workouts a day is wild, bro. Keep up the great work. All my love to you and your family. Say hi to PTW for me. Not Oscar, dude. I've been doing doubles for 2 weeks, bro. Monday, I did a triple. All right. Yeah. I won't say anything about not Oscar, but yeah, working out with that guy. Dude, thank you, man. Joshua and Bobo, new member. Sunny Trish. Hey, BCB, I've been watching you for a few years. With your videos and reassurances, I was able to grow my bags to multiple 6 figures, but not only have the confidence to start a company and make a 7-figure company. Thank you. Jeez, man. Good for you, dude. Having something that you've built is far more rewarding than hitting it big on a coin. That high passes and comes and goes, but when you build something, that feels pretty good. Mr. Nobody, are we holding the party at Bull Run Peak or after we cash out? I can provide the music. We'll be there. Will there be feats of strength, bench, deads, log toss? Oh, we can all measure how jacked we are. Yeah, I don't know. I haven't thought about it. Like it's like one of those things of like counting your chickens before they hatched. Just back of the mind, not thinking about it. Thank you, brother. Tico Stern, I love the content. 53 months as a member, dude. Almost 4.5 years, man. Thank you. You stay in the shadows a lot. Thank you. Joker's performance. Been here a long time too. Historically, 25 pushes this market out further, favoring large caps. 0.25% pushes this market out further, favoring large caps. 50 historically seems to favor the Russell and small caps. 25 could extend this market out longer versus 50 giving that small pump and over soon. Thanks. Yeah. I don't know. I'd have to look back at that. I don't know if that's accurate. You'd have to give me pure data to prove that. Then I'd be like, okay, that makes sense. Otherwise, I'm having to go based on your word. But I haven't noticed that. So I don't know. And I don't think the 0.25% in any way is going to surprise the market. Interestingly enough, the 2-month yield is now down 3.96 as we're getting going on the day. But I think from everything, the research I'm trying to do here and see if this has the potential to be some type of catalyst event, what would need to be the thing to give it the juice. And it's that we're moving towards an accommodative stance. It has less to do with 25 basis points or 50 basis points or them coming out. If they came out and said, we're moving towards an accommodative stance and here's 50 basis points, or we're moving towards an accommodative stance, here's 25 basis points, and we're going to start chilling out on balance sheet runoff, right? Whatever. There's some employment issues here. We want you to know. We're here. We're going to protect you. Don't worry about it. That's all the market needs, right? But we don't want, I don't know nothing about nothing. We'll see. Don Dilha says, how do you look up developer report? Sure. You can go to developerreport.com. Oh, man. You followed with another super chat too, man. 6 minutes later. Thank you very much. Developerreport.com and sentiment.net. Those are your two places that you can get a lot of that data at. I think YouTube is crashing on me. So, frog it and let's go. I agree. All right, here we go. Happy Wednesday.
It is Wednesday, my dude. It is Wednesday, my dudes.
All right. That are it. Guys, thank you all so much for tuning in. Keep your eyes peeled for us getting together in a little under 4 hours from right now. So figure out whatever time of day it is for you right now. Say what's a little bit less than 4 hours from right now. We'll get together about 5 minutes before the top of the hour. So let's say 1:55 p.m. Eastern, 12:55 p.m. Central Time, 10:55 a.m. Pacific. All right. We'll get together. It'll be our last Fed live stream, at least in its current format. I don't have any plans for Fed in the future, but I'm just going to set expectations. This is the last one that we do. So tune in for a historical moment of a rate cut in probably the last Fed live stream that we do. But here we go. There it is. Otherwise, guys, check out the newsletter over here at blockchainbacker.substack.com. This was just posted 2 days ago. It's a long one, 43 minutes. Worked all the way through the weekend. Yesterday was first day off in quite some time. But otherwise, I will check in with you guys in about 4 hours from right now. Everything crashed. I got to make sure you're still there. You are still there. All right. That's going to be it, guys. Thank you so much for watching. If you could, please like this live stream and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.